on your screen at the moment from Deal Street. It's an important deal that has been announced, and it as follows: that Polaris has entered into a definitive share purchase agreement with Virtusa Corporation, whereby a subsidiary of Virtusa is going to acquire 53% of the paid-up share capital of Polaris from promoter entities, including that which is held by Mr. Arun Jain, and that the price of this is at 220 rupees and 73 paise a share, which makes the deal value at 1,173 crore rupees. So that's the deal. 1,173 crore rupees Virtusa is going to pay for a 53% stake. There is also an open offer, a mandatory open offer that will be part of this deal, a 26% mandatory offer. What the two sides claim that the deal they've entered into is to create what they call a compelling platform for digital transformation services. This is a deal that we've been talking about and hearing about for quite a while now, and the deal contours being announced. In fact, at 7:45 p.m. today, we will see a press conference also by Virtusa and Polaris as far as this deal goes. Let me tell you what the seller, that's Arun Jain, the chairman of Polaris, said in a press release. I'm delighted to have identified Chris and his team at Virtusa to pass on the baton to grow Polaris by offering greater value to customers and more opportunities for the team. I wish Polaris associates who contributed to building Polaris into a world-class company in the BFSI space continued success in their journey under the larger canvas of Virtusa and Polaris. So that's as far as the deal contours go. In fact, Kritika also joining us now. Kritika, it's a story we've been talking about right here on CNBC TV 18, a done deal now, a 26% mandatory open offer, the price being set at 227 rupees a share.
Absolutely, Nantara. In fact, this is one of the deals which were in the offing for a very long time. And, beyond a point, you stop really believing if it will actually go through. But essentially, we had reported about 3 years ago that Polaris promoters had started looking out for buyers. Now, what happened at that point was that several players, including players like Tech Mahindra, had looked at Polaris, but it wasn't as attractive from a margin and from a cash flow point of view. So the challenge for the promoters, including Arun Jain, was to make Polaris a company which had a forward-looking outlook, which had a strong EBITDA multiple. So what they've been doing is, and as you already know, they have over the last 3 years demerged Polaris into separate entities. So the business that right now is being sold is the Polaris, that is the listed entity. So that's the consulting business largely. So that is BFSI, manufacturing, high-tech. Largely they've been specializing in the consulting solution. Remember, they had demerged and removed the product business out of it so that they can purely be a pure play services firm, and the product business will be kept and has been demerged as a separate entity and listed separately. So that Arun Jain will continue to hold. Now this Polaris, essentially Arun Jain and Obitech, that have been the founders and promoters of the company, will be exiting completely. They will not even continue to hold a board seat. It's what will happen is once the deal is completed, Virtusa will have that 53% for
analysts.
Will have about 200 and, as you said, 275 rupees per share is the price, and 1,173 crore rupees for that 53% stake. Now remember, that is only for the 53% stake. Going ahead, we are going to see a mandatory open offer for 25%, subject to, if at all, the deal is tendered completely and all 25% of the public shareholders do manage to tender in. Remember, that will take their shareholding, Virtusa shareholding in the listed Polaris to above 75%. So that will take the overall market value, if I'm correct, to almost, so the deal value will come up to be roughly over 2,500 crore rupees, and the overall market value will go above 3,000 crore rupees. So it's definitely a win-win. Now let's understand what is in it for Polaris. Polaris becomes a part of Virtusa now. So Polaris will get absorbed into a larger MNC entity. They will now have a larger footprint, and more importantly, Virtusa will be able to enter India. Virtusa hasn't been present in India. They've been partnering with players like Tech Mahindra, TCS.
Yeah, you know what? In fact, let's get reactions and not second-guess the synergies. Hang in there. We're now joined by Prakash Diwan. Thanks, Prakash, for joining us here on CNBC TV 18. So it's a done deal now. We've been hearing about it for 3 years. What's your initial take on Virtusa buying 53% stake in Polaris?
So definitely, I think it's a very progressive move for the remaining shareholders, because Remember, Virtusa is a fairly large presence, a large name which trades at a 20+ multiple in the US, whereas Polaris Consulting is just about 12+. So very clearly, there's an incremental upside that the stock would get re-rated with. So and the price is as expected. It was anticipated between 220 and 240. 227 is absolutely on the mark and makes a big difference for the company's overall rating in the consulting business, because the management never wanted to focus on two diverse businesses ever since they hived off the intellectual design part.
So do you suspect that there will be continued focus on BFSI?
Yes, see, that's always been a core activity. Genetically, they have always been servicing Citibank, and that's how it started off as a business. And BFSI is getting fairly competitive. So if you're not present in large, chunky accounts with visibility of earnings, it's extremely difficult to get that respect and rating in the market. So a player like Virtusa could get that business scaled up, which the current set of promoters probably are finding difficult.
Right. Prakash, if I could just step in over here. As you said, the price seems to be above what we were expecting. But could you tell me, in terms of the kind of EBITDA multiple that the Polaris promoters are getting, how does it figure out? Because they were, to my understanding, over the last couple of quarters, trying to pitch for above 230 to 235 rupees per share. And more importantly, if they are around this band for the open offer, do you believe that investors will find it as an attractive solution?
No, I think, there's always a provision and promise of the offer being revised and possibly upwards, because as I said, with Virtusa coming as owners, the company will get re-rated, and Virtusa gets paid a much richer multiple in the US. So why not get some sort of a rub-off effect out here in the Indian subsidiary if it goes through? So I would believe if you could look at an offer, a revised offer between 250 and 260, 270. Which could possibly finally get people to tender in completely and not in the first round.
Okay, so for the open offer to be successful, you say that the price should be above 250.
Yeah.
What I want to understand is that do you believe, considering the fact that Virtusa is listed on the NASDAQ, do you believe that there would be a case over here for them to look at delisting Polaris eventually?
Well, it could make sense unless they're looking at any particular expansion within the Indian markets and raising local equity, which is not something which the consulting business. Remember, it's not a very cash-intensive, cash-hungry business, and where it works well is the network of clients that you have. Consulting is very rich in margins, so people really don't want to dilute and share it with too many people.
Okay, a last quick question. I wanted to understand from you, how do you expect investors to see Polaris' business as a whole, given that they have an MNC like Virtusa on board right now? What is the kind of growth multiple that investors can get at this point in time, from, let's say, a 3 to 5 year point of view, given how the IT sector has been performing? How can investors see Polaris now, provided, of course, it remains listed?
Yeah, so the advantage that an investor would have being invested in a company like this is that you'll find two very clear outcomes. One is scale. Virtusa will be able to get scale very easily and very quickly at that. And the second thing is if consulting were to broad-base, the consulting arena is to broad-base itself from BFSI into the other nascent verticals that Polaris has been slightly struggling with. That becomes, additional diversification, which always attracts a better rating. So instead of being a pure BFSI play, if it were to do, let's say, healthcare, let's say, tourism, consulting, there's a huge difference that it can make. So scale and the product and the offering mix is what will make a big difference to existing shareholders now.
Okay, so, simply put, the price, as you said, will have to be revised as far as the open offer is concerned. How do you expect investors to see would you expect some kind of re-rating of the stock in the next coming days? Because Polaris has been disappointing investors for quite some time, and that has been a concern across the IT sector. There have been obvious headwinds over here. Do you expect Polaris to jump up in terms of performance, A? And secondly, are you expecting a re-rating of the stock, and perhaps the stock, what is the kind of reaction you're expecting tomorrow?
Yeah, so at a multiple of 12 FY16 basis, the current price probably doesn't really offer much to investors who've been holding on. So it could possibly see a little bit of a spike, more from a sentimental perspective in anticipation of a richer offer following after this. So, of course, that all subject to the market conditions, because people do tend to get out of long-standing holdings like Polaris if things don't look very healthy. And given the market conditions, the volatility in the market, anything could happen. But I would believe there could be a re-rating upwards for the stock, maybe another 20-25 bucks, which would be just another multiple on the P multiple from 12, it could move to about 13-14.
Okay, fair enough. Prakash, let me understand from you in that case. We've, had this whole mid-cap IT pack, be it Polaris, be it Emphasis, Geometric, even several mid-cap IT companies that have been on the block but haven't been sold off. Polaris, of course, has gone through a significant cost-cutting drive to be able to reach this space where they got an investor. What are the companies that you would look out for now? As far as the consolidation is concerned, as far as M&A deals is concerned, do you think that this will increase the possibility of, say, Emphasis being sold off or the Geometric being sold off?
No, so, Geometric has been on the M&A radar for a while now. And the improvement in numbers in the last 2 quarters, including the recently announced numbers, it does make it a candidate worthy of looking at. But I would believe the consolidation is very specific to businesses and not across the board as yet. And Indian IT companies are finding their strength in niches rather than, a broad swathe of the entire IT offering. So you would probably see smaller players looking at getting into some sort of arrangement. So an FSL could probably look at it because the core promoter, the parentage is in a very different area of work. CESC doesn't have any expertise on software business, but they do own that company. So FSL could be one. You could probably see something like this happen in Hexaware at some stage. But I don't think this will be a trigger of sorts as yet. This will be more of a standalone thing because of the quality of consulting business that Polaris was looking out as a suitor.
All right. In fact, we also have Dipen Mehta. So let me bring him in. Dipen, you heard the price. You heard the basic contours of the deal. Arun Jain will be exiting completely. Virtusa comes on board. So, how much of a benefit will Virtusa coming on board for Polaris be as far as market share is concerned? And are you happy with the price as is?
As I understand, I think it is a slight premium to the market. Am I correct?
Yeah, there's a slight 225 rupees per share.
Okay, so I think that's really positive. That the fact that it is at a premium to the market price. That is for one. And secondly, I think Polaris was in any case struggling with the existing business after they had split off the product business. Having a strong partner like this is very, very positive for minority shareholders. And this, I think, is really the key advantage of being in the mid caps. That the M&A action which takes place over there generally works out in favor of creating value for all shareholders, and I think it's very positive. And on the whole, I think it will create new growth opportunities and better prospects for the company as a whole.
Okay, Dipen, we don't know the timeline of the open offer yet, but considering that there'll be after 53% stake acquisition, there'll be a 25% open offer. Do you believe that the price is obviously not up to the mark for an open offer? Do you expect investors to see a revision as far as the open offer price is concerned?
No, I think there's a finality on the price. Usually, if the price is negotiated between the promoter to the sale of a company, the price is set. And the second question, whether investors may take the price or not, will depend upon how the stock reacts and what the actual market price is closer to the open offer. But my sense is, my first reaction, and again caveat that we and our clients are invested in Polaris, is to not offer the shares, I think, because in any case, valuation-wise, it's not that expensive in terms of other mid-cap companies. And if growth is in fact going to pick up for Polaris, then in fact it may be a good opportunity over the long term.
Okay, we also have Pankaj Sharma joining in now. In fact, Pankaj, same question to you. Do you believe that the company will have to revise, that Virtusa will have to revise and give a price of 250 rupees per share plus for investors to tender into that open offer? Do you see any hurdles coming on for Virtusa to actually get that 25% stake?
See, I think that is slightly a hypothetical question, because ultimately it would depend on what price they want to offer to minority shareholders. But overall, it looks like that definitely, since this news has been in the market for last so many quarters that this sale is on. So I think this has been impacting, and this was an overhang for some time. So minority shareholders probably would think twice before they tender their shares in case of an open offer. So their subscription is still very doubtful. Unless there is a significant premium versus current market price, they would probably not do that.
Okay, Prakash, let me understand from you in that case, what are the benefits that Polaris gets on board? Of course, Virtusa is a NASDAQ-listed company. They have broad-based solutions across the board. But, specifically Polaris, that has been lagging behind its peers over a broader 3-year time frame. How much of a leg up really can Polaris get in the near term? Pankaj?
Yeah, sure. So basically, I think of course there is specific businesses where the company wants to focus on will be decided by the company which is acquiring. But I think two very, very important things that will happen after this, that there has been a lot of impact which has been there both on the client side as well as the employees side. So I think that morale of employees internally would definitely go up, because there is clarity now. Also, clients would think that there is more seriousness in the company's approach now. And of course, this brand is huge, and it's definitely something which will get a lot of benefit to Polaris. But overall, specific areas the company will focus on, I think it's something which is still evolving and will take more time. But it's very, very good for clients. They will have more clarity, and definitely for employees, their morale would be significantly boosted by this news.
Okay, so we've had 3 experts on the channel, Dipin, Pankaj and Prakash, and all 3 seem to believe this is a win-win deal for both the companies. Thank you, gentlemen, for joining us here on CNBC TV 18. Thanks a lot, Kritika, for joining us with that. So that's a done deal. We've been hearing about it for 3 years. Polaris to sell a 53% stake to Virtusa. This also includes a mandatory 26% open offer. We haven't